What the times we're living in right now, if you aren't taking advantage of this, if you're not buying a primary residence, if you're not buying a second home or investment home, you're missing out. The ability to achieve wealth through real estate is greater than ever. That's my take home here. The ability to achieve wealth through real estate is greater than ever. And it's all in the numbers. Most of your payment or most of your tenant that's paying you money or your vacation renter that's paying you money is going to go towards principal on every payment. Mind blown, little emoji. Hey everyone, Mortgage Nerd here. I stumbled across something and I realized that everything I've ever known in my 15 years in mortgages is being flipped upside down. What do I mean by that? I really always have considered myself a nerd when it comes to mortgages. I studied amortization tables. Who the heck voluntarily studies amortization tables? Only a nerd like me. I realized years ago as I started looking at this, how amortization works. I'm going to give you an example because average interest rates years ago were about 5 or 6%. Let's see what that does. All right, so this is an amortization schedule. When I calculate, it tells me on a $400,000 mortgage, 6% interest, 12 payments a year for 30 years. The total that you repay right here, $863,000. You're paying more interest than you borrowed. You borrowed $400,000, you're going to pay $463,000. This is where when people say, "Oh, can I do biweekly payments? Can I do something to accelerate my mortgage? What are different things? Should I pay extra?" Yes, absolutely, because you're paying so much interest, so much. It's really not that bad. People in the 80s would say, "Oh, 18%, that was a high interest." So when you do this, when you have a 6% or a 5% or a 4%, the majority of your payment goes to interest. Because remember, some goes to principal, some goes to interest. Let's see. So on the 6%, your total payment is these two combined right here, $23.98. $2,000 goes to interest and almost $400 to principal. That's it. $2,000 goes to interest and $398 to principal on your first payment. Let's see what happens at 4%. So here we are at 4%. Now look at what that difference is. Look at how much money is going to interest. Remember, it was $2,000 going to interest. Now it's $1,333 going to interest and $576 going to principal. That's huge. People only look at their monthly payment. You only see the stuff on the front, not what's happening on the back end. You have to look at both when you save money on interest. So this payment is $1,909. You're saving $500 a month up front, plus you have an extra $180 or so going to principal. So your savings there is the $500 up front plus the $180. You're saving about $680 a month in interest by reducing from 6 to 4%. Let's go deeper. We're still lopsided. We're still paying more interest per payment than we're paying principal. When does that flip? I always would say it takes about 7 years for it to really start going. It takes over 15 years for you to pay off half your mortgage. But I'm getting at something here because VA mortgages right now are down in the low 2s. 2.375 is an APR of 2.456. So what's going to happen when we get down there? Now I'm going to show you a little bit more what really blew my mind and how it's flipped everything upside down. All right, so I'm working on this VA for some guy who owns a mortgage company and he's very nerdy. So of course, my rate is a little bit better, just like you get a discount on your business for whatever you do, you get discounts. Well, I get discounts too. So now my VA rate is 2.25. And this is the purchase that we're doing. When I saw this, the amount of money going to principal is $1,509 per month. And the amount going to interest is $1,453. My conventional thinking, everything I've learned in my career that I've seen through over thousands of clients that I've worked with is never that you could pay more money in principal than interest with these rates. It really is mind-blowing that you could pay in this mortgage $18,000 of principal every year when your payment is just under $3,000. What the times we're living in right now, if you aren't taking advantage of this, if you're not buying a primary residence, if you're not buying a second home or investment home, you're missing out. The ability to achieve wealth through real estate is greater than ever. That's my take home here. The ability to achieve wealth through real estate is greater than ever. And it's all in the numbers. Most of your payment or most of your tenant that's paying you money or your vacation renter that's paying you money is gonna go towards principal on every payment. Mind blown, little emoji. Phil Stevenson, Mortgage Nerd, thanks.